So we had TriNet out last night, which is one of the two professional employment organizations, Insperity and TriNet. And this one has chosen a different direction. In general, we make this point quite a lot. TriNet, for a variety of reasons, ends up being about a quarter behind Insperity in terms of results. I think it relates to the way they recognize costs, and there's a good deal of flexibility in that. But they're coming out with a beat and an optimistic guide, which is absolutely goofy, right? Like, it is just not at all what we're seeing from literally any other company that looks like this. And when you look at the proxy, you realize they get paid on a specific kind of revenue growth and a specific kind of, well, they get paid on adjusted EPS growth. And it's over a rolling period, and it's calendar year. So this is their last. I think that this management team recognizes this is their last chance to get paid in 2021. So they're eking over the, what are likely to be the maximum thresholds for that comp package, and they're going to get paid. But when you look at the estimates implied in their costs to provide benefits to employees, mostly healthcare, they're guiding to pandemic low healthcare costs as a fraction of their revenue, which is just, obviously is not what Insperity said on Friday or on Thursday night, and is obviously not what's going to happen, right? That's not at all the way things are going on.
It's ridiculous. Like, who sits on the board of TriNet? Now that the call's live, like, that's a real question I'm asking, like, for some friends in Hedgeye Nation and for Jay. First of all, you're signing off on a company's executives getting paid on, if I heard Jay correctly, adjusted earnings per share, which means you can make it be what you want it to be. And secondly, you're making shit up on the forward outlook so that you get paid anyway. That's ridiculous. It's like, who signs off on these things?
Having worked at a small public company, people like being on the board, right? Like, they want to be friendly with the CEO and make sure they stay on the board. So they get their, they can tell their people at the club or whatever they're on the board, and they get a nice little check and nice dinners and all the perks of being on a board of a public company. So there isn't it's a pretty friendly thing. I went to board dinners, and it was pretty friendly, and that's just how. And that was I think those are good guys. There's nothing wrong with them. It's just like it isn't as much of a check as you might think, which is why oftentimes I think when you see an activist get involved, or Value Act, or whoever it is, then suddenly you have a real check on management, which is why people like seeing those investors come onto the onto the board. This is I think a large diluted board, and of people who've been there a while, so it isn't necessarily a great check on anybody.
This to me lacks principle. And I don't care what the company says back until they change like how they get paid or how they account for things in getting paid. It's just a glaring example of what pisses people off in America, actually.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.